This is CA Himanshu Singhal, and in this video we are discussing about the cash flow level 1. I have created this video specifically for the FDD professionals, and I'm trying to present a method in which you will not face any difficulty in creating and matching the cash flow. In my experience, I have seen people struggling with cash flow because they start with the wrong method. They start with the PAT and then keep on putting all the adjustments and hope that the cash flow matches at the end, which generally doesn't. So in this method, what we do is we match the cash flow first and then we start putting on adjustments. There is never unreconciled gap in the cash flow. So I'll walk you through the process and the files that we have here. First one, this is the balance sheet. This is a typical balance sheet for a FDD profile. So we start with the tangible assets, then we have working capital, net debt, followed by the retained earning and share capital. Then we have P&L. Here we have revenue, gross margin, EBITDA, PAT. I have created this cash flow here for your easy reference, and you will get the link of this file in the description. I'll get on to the method. The first step is we'll see the cash balance here, which is decreasing in this case. We'll take the reverse sign, which is 1546. Ideally, since the balance is decreasing, it should have been negative, but here it will be positive. What we're gonna do is we're gonna keep the same formula to the top. Now we'll reverse the sign for the share capital and retained earning. This was positive. This was E minus G. We'll put G minus E here. Now the first step of check is this should be 0, which is so our cash flow will match, and we're gonna put the same adjustments here. We'll start with the most easy ones, the working capital. You don't need to worry about signs because we have eliminated that problem there only. After working capital, we'll put capex. Now borrowings, and the last piece is retained earnings. So retained earning, I'll put like this here. Yeah. Now the total of this should be equal to the decrease in cash flow that we are expecting, which is 1546. Your cash balance, if you remember, was decreasing by the same amount. So our cash flow will match. Now since our cash flow has matched, we'll start putting on adjustments, starting with the most complex one, the retained earnings. We'll break these particular adjustments into the typical movements that have taken place for retaining to from this place to this place. I've created a small movement here, so the difference is coming out because of profit and the dividend. So we'll so this is 891 here, and we'll put these adjustments here. The PAT here and the dividend here. Now what we do is I'm just some totaling the formulas so that we put a check at the top and ensure that our cash flow is matching at all points. Yeah, as you can see, our cash flow is matching, and bear with me for the one or two casting type of differences. So I'm just gonna put a check here. This yeah. Now I'll put the P&L adjustments here, and for any adjustment that I put up, I'll have to put a equivalent adjustment below, so my cash flow reconcile at all points. I'll start with the P&L. We are at the PAT level in the cash flow. We have to reach to the EBITDA level. So I'll reverse all these adjustments there and put the corresponding impact below. Starting with the other income. Other income here. Okay. So it was supposed to be a reversal, so we will put negative signs all places. I put other income at the top. I need to put other income here as well. I'll reverse the sign above because I am supposed to eliminate the impact. Next is depreciation. Second impact in the capex. I just simply have to take the reverse signs and not need to worry what will happen. Make sure you're reversing because there is high possibility that you forget to reverse the signs. I'll reverse this extraordinary item here in the other income. Tada, our cash flow is ready. So this is a very simplistic presentation of how a cash flow can be prepared. Thanks for watching, and if you like the video, please do subscribe.